Excel Accounting Practice Problem, Bank Reconciliation, Month 1, Part 3. Get ready, because we're about to excel. Here we are in our Excel worksheet. In prior presentations, we put together the worksheet from a blank sheet, now continuing to enter data into it. If you have access to it, there's two tabs on down below, an example tab and a practice tab. The practice tab starting out where we left off last time, the example tab in essence being an answer key. We're going to be continuing on in the practice tab this time, scrolling all the way to the right to see where we left off in our creation of the bank reconciliation. So we're going all the way to the right. We had, in essence, completed the bank reconciliation as you might see it in, say, like a book type of problem. We compared the bank balance and the book balance, looking at our mock bank statement over here. To do so, we started off by looking at our detail in the checking account for the first month that we got from a prior worksheet that had the detail for January. We ticked and tied everything off from our statement over here, from the bank statement, and on our books, leaving the items unchecked, which are going to be the items, or ungreenified in this case, which are the items that are the outstanding items. And then we constructed, in essence, what you might construct basically from what you'd see in like a QuickBooks type of software, some type of software in accounting software, typically that would kind of confirm the cleared balances, starting with the 30,000 we had up top. That's going to be the beginning balance typically from the bank statement, which we had to kind of adjust for the beginning balance due to these two items which were outstanding in the prior period, which shouldn't be as much of a problem going forward to the next bank rec, although we do want to think about the next bank rec and how these outstanding items will impact it in the next one. So we will do another bank reconciliation so you can see that. And then we could see this reconciliation, which will reconcile down to then matching what will be on the bank statement if we had adjusted for those last two items. So there's two more items here that we have not adjusted for, that being the withdrawals and the bank service charges that we need to add to our books in order to complete this bank reconciliation. That's in essence what you would have to do in like accounting software like a QuickBooks or something to complete the bank reconciliation. If you were doing a book problem, you might do the bank reconciliation and see it thusly, in this way. They'd probably tell you what the differences are, and then you'd have to decide, is that on the bank side of things or the book side of things? So we've got our book balance, this being the ending balance. We've got our bank balance now being the ending balances, not the beginning balances. And then we're trying to reconcile what the difference is between the two. And we know that these two differences are on the bank statement, not on our books. These are the things that we're going to have to adjust for. These items over here are the ones that are on our books that are not on the bank statement, which we determined in practice we would have to determine by actually ticking and tying them off in some way, shape, or form. And in a book problem, they probably just tell you what the outstanding items are. And those are going to give you the reconciling items so that we have now reconciled down below. The next step is going to be that we need to fix our books for these two items that were on the bank statement, which were not on our books, and we're going to add them to our books. So that's what we're going to do now. So once we do that, then our book balance will change to be the correct book balance after having adjusted for these, meaning this balance, the 88,646 about. And so we'll no longer need this side of the reconciliation, and we'll basically have the adjusted bank balance will then tie out to the adjusted book balance down here. And this side will be, in essence, all we have for the bank reconciliation, which is the report that you would typically get and see from like a QuickBooks software after the reconciliation had been done. So we're going to add these two items into our books. It's going to be a little bit funny because we're now in February right now, and these two we're imagining to have happened at the end of January. So we're going to make these adjustments, as of right now when we're kind of moving forward at the end of the period. So I'll show you why. That's a little bit funny in our worksheet here, but it'll be fine. So let's go all the way to the right and add these two items to our books. So I'm going to go all the way back to the right and do a couple journal entries, journalizing some journal entries. I'm going to unhide some cells back behind Z here, right click and unhide so we can see where we're going to enter these entries down at the bottom here. Let's then hide from T, the skinny, from T on over to A to T, at AT, right click and hide those items. And then we're going to be recording these two. So let's say that we're going to record the withdrawal. So if we withdrew money from the books, then the question is, if you take cash out, the question is, what did you use the cash for? Now, oftentimes, if you set up a bookkeeping system, you usually want to be drawing money out only when it's for your personal purposes, and then you can make the draws be like a draws account, you taking money out of the business. But if you take money out for business purposes, then you would have to track the receipts that you're going to be spending it on. That's why it's a problem, because you would rather have the actual audit trail for the expenses, because you want to track the expenses so that if you get audited for something like a tax return or something and a deduction, you have the audit trail from a check or from a credit card payment. But if you pay cash, that's the problem with cash. So cash is not as trackable, is a problem with cash. So you would think that the draws that would come out you would want for your personal use, but we're going to assume this time we use the cash for some business purpose. We don't know exactly what it is, and we're going to put it into miscellaneous. So that's what we're going to put it into, miscellaneous expense. So we're going to put miscellaneous in alphabetical order. So it's going to be around here. We'll put it right here. Let's put it right there because that's what it would be like. It would be in alphabetical order if we put it into like a QuickBooks system if we weren't using account numbers. Oftentimes, if I had a choice, I would put it like kind of towards the bottom since it's a miscellaneous category that shouldn't be as important of a category because typically it should be fairly small. But in any case, we're going to say insert, shift the cells down, and I'm just going to call it abbreviation MISC expense. Zeros to start out with, starting points at 0. And I'm going to be picking up the debit's going to go to miscellaneous expense, and the other side's going to go to the checking account. To the checking account right there. And so that's going to be indented, alignment indent for the amount of, what did we say? It was like 150. I think it was 150, 150. There's the debit. There's the credit. Let's post it now. So we got the miscellaneous expense here, which is an AC 28 equals that 150, bringing the balance up to the 150 for both the month of February. Now notice this is where it's funny. It's not really in the month of February. We entered this this should be as of the end of January. So notice we're entering this in this point in time. It'll be right at the ending point in time, but really this is kind of something that should be entered back in January. If you were using a QuickBooks system or something like that, then you probably wouldn't close the month out, meaning you're not gonna put anything into the prior period until after you make the bank reconciliation. So usually the bank reconciliation is the point at which you then say, I'm not gonna post anything back into the backdated information. Of course, posting something back in the prior period after you've already entered data in an Excel sheet is going to be a little bit more difficult. So it'll still be fine at the ending balances, but notice we got this little kind of chink, this little kind of problem with regards to the transaction for the current month. So we're kind of focused on the year to date with regards to this problem. So in any case, we're going to say the checking account is up top. Checking account is going to be the credit of the 150. There we have it. So it's going back down. Again, we're looking at the ending, balance number in essence here on the balance sheet. So then we're going to post it. Let's post it on out to our GL as well. So we're looking miscellaneous. I have to add that after the internet. So we're going to go to the right and see if I can find that. So we're all the way to the right in the expense account. So there's the internet. I got a space right there ready and waiting for it. So perfect. Perfect. We're going to copy that. We're going to put that down here just for the formatting. Going to delete the activity. We're going to put the name in CG14 equals left till we hit that account. We're picking up the account. I don't need to hit the wall. Picking up the miscellaneous expense. That's the one we want. We're going to record this. Again, I'm going to put the date here. It's going to be recorded as of 1/31, which is last month. So that's kind of where the little problem is here, because really you would think that would be like in the beginning balance here. But I'm going to put it in 1/31 because I have to put the dates kind of in a chronological order, given the way the Excel sheet is going to be working, unless I make it. So we'll keep it at that. So we're in CH17 equals left to the wall. We will then pick up that amount of the 150, the other side going to the checking account, but I need to add that miscellaneous account now to my check figures up top in the G to the L check figures. So let's do that. So I got to add it here. I should be out of balance here. So I'm going to double click here, go to the end of it and say plus, and pick up that amount that we have added. We have added it miscellaneous expense. It's down here in CI. So CI 24, enter. So now we're out of balance there, and I need to add it to this check figure 2. So we got to add it to that one. So we're going to go back on over here. This is comparing the net income from the general ledger accounts to what's on our trial balance. That's another check fig. So we're going to say there it is, the check fig, the 4805 for the year-to-date number, matching the 4805 down here on the trustee trial balance. Let's record the other side to the checking account. The other side was down here in the checking account. Checking. So we'll check out the checking and say we want this down here at this is at 131. Again, that's funny, that funny date out of order. Not going to bother us. I'm not bothered by that at all. That doesn't bother me. That doesn't bother me. That's at the 95,791. 95,791 here too. So that looks good. Let's record the other one now on 228. And this is going to be bank service charges or some kind of service charges that we have. Let's call it bank service charges. So we'll put that up top right here. We're going to add another expense account, and these are for these service charges, the $15 that the bank just, they just charge you and take it out of your account. And you're like, all right, whatever the charge is, I guess I signed something that's what it was. Bank service charges 00. And then we'll put that down here. We're going to have to add this one. This is going to be equal to the bank service charges. Other side going to the checking account. The checking account. And we'll go to the account and alignment, or alignment and indent. And then let's put that into the bank service charge in AC27 equals. Hold on a sec. I didn't put the number there yet. I got to put the number here. It was for $15, I believe. Not 150, just 15. The bank didn't charge us 150, 15. So we're at the bank service charge up top. We are in cell AC27 equals that 15. And then the checking account up top, double clicking on it, going to the end of it, and plus, and picking up once again that 15. Putting us back in balance on down below. And let's record it. Now I got to add another account for bank service charges after the cost of goods sold. So I'm going to go to the cost of goods sold. I need something like right here. So I'm going to put my cursor on the skinny. Go over to the AC, Control C, put it on this skinny right there. There we go. Precision. And then I'm going to delete the stuff that's in it. Delete the stuff that's in it. I don't need the one on the bottom. So I'm gonna remove this by first making them just normal blah cells. Home tab, paintbrush it, just make them normal cells, and then delete it. And then we'll go up top and change the name up top. This is going to be for the bank service charges that we just created right there. Enter. And this, once again, is at that funny date, 131. So we're on CH5. CH5 equals left till we hit the wall. We're going to be picking up that new account that we set up, which was the bank service charge. There is that. We got to add this account to our check figures now. So we'll go to our check figures to add them there on the GL check figs. Double click in the check fig. This check figs are just as out of control long formula. It's out of control. There's no control in it. It's in control. This is in control. I've got it. I've got everything in control. 15 right there. And then we'll pick up the next one. This needs a check fig comparing the net income on the general ledger and on the trial balance. We got to pick up our new account in that one too. This one's the 15 too. Enter. So that 4790 matches the 4790 down here. So we've added those two items. We have now added those two items to our books, right? Okay. So now our ending balance right here doesn't really tie out to the balance here because my trial balance is being ran as of the end of February, at this point in time, right? So we're looking February numbers. So what I got to do then is go back to my bank rec. I'm going to go back. Hold on a second. Something's red over here. There's a red 15. I didn't post the other side to the checking account. Did I not post the other side to the checking account? I did not do that. See? Check figure. Found it. Saved my life. I almost died from that. So then on AG22 131, we're in AH22 equals left to the wall. Scrolling down, we're going to pick up 15. Enter. So now we're at the 95,779. That should match the 95,779 here. And we're back in balance. We were in balance before. Okay. Now, let's go back to the right and say, well, what does that do to my bank rec? Got to make my bank rec. The bank rec sounds like it's going to wreck the bank, but no. The bank rec is not actually a wrecking of the bank process because it's short for reconciling. So now what I need to do is add those two to my running balance here because this running balance is for the month of January. So I got those two other things that happened down here, 131 and 131. Or let's copy this stuff down and just copy it down two more. And we've got 131, 131. And then we have the 150 and the 15, negative 150 and the negative 15. So as of the end of the month, these two are the added two items that I have to put in place, resulting in the balance ending now at the 88,646. So now those two items then, we could say those two items should be included right here in my reconcile. This is what you would kind of do like in a QuickBooks setup. Now I fixed it in my books, which means it would show up over here as something that would be able to check off. So we're going to say that there's that 150 now, and then there's the other 15 that we just put into our books to fix it because it was on the bank statement and not on our books, and we just went in there and fixed it. So now we can just check off or yellowfy, which is our form of checking off, yellowfying those two. So then that puts us in balance. So now we've got the cleared balance is the 30,000. That matches the 30,000 that is here. So that looks good. And we took care of the beginning balance issue. And then the 143.71 is the additions that we have. And then the subtractions are the 111,829. And those are these. We fixed that one, giving us our ending balance of the 61,242, about 61,242. In practice, you would like to get it down to the penny, by the way. I mean, because any kind of deviation could be in multiple items that you're missing. But in any case, we've removed the pennies, so we're not doing that. So then if I go over here to my bank rec, remember, this process of doing this is not a bank reconciliation. This is not a bank reconciliation, this thing, because this is the process of giving us the information to tell us how to do the bank rec, which means that these is built from these outstanding items. These outstanding items, the things we didn't check off, are the ones that are going to be used to construct the bank statement. So if I was to then say in like a QuickBooks system, okay, this checks out, now make the bank reconciliation. It's not going to, it might add this part to the bank reconciliation, but this isn't really the bank reconciliation. The bank reconciliation is the uncleared items. So then over here on this side, I'm going to say this is no longer a problem. I don't have this difference anymore. Those differences are gone. So, and this starting point is no longer 88,811. It now is going to be equal to the ending balance that we have down here, the 88,646, because we adjusted it, we fixed it. So now our book balance is the 88,646. We don't have any adjustments to the book side of things, because if we did, we would fix them, and therefore we have the same ending balance. Therefore, this is really the bank reconciliation, this side over here, which is taking the bank balance as of the ending date, 61,242 about, and then showing us what the difference is to get to our book balance, which should normally just be the outstanding checks and the outstanding deposits to get to the book balance of the 88,646. You don't need this left-hand side because this amount should now match the book balance if you had fixed basically the book balance. So that's the general idea of it. And so that would be it. So now next time we'll do the bank reconciliation for the second month, And we expect then these outstanding items that are here in this month generally to clear in the next month. They don't have to, because someone, the check might take a few months to clear possibly, but you would think those would clear next month. We can check to see if these checks are cleared, and that gives us a little bit more security that things are going the way they're supposed to go. But again, our goal is not just to check on these few items to see if they're cleared or not. And this item, which is a big item, we'd like to see if that cleared. But also, we want to just be able to reconcile, because the ability to reconcile gives us more confirmation that everything else that we did, everything that we have entered, has been double checked, verified with an external source, the bank, making the checking account, the whole balance, every transaction more legitimate, or giving more verification that it's correct. And that also, because the cash, again, is the lifeblood of the organization, means that the other side of every transaction involved in the double entry accounting system, which will impact every component of the cycle, revenue cycle, sales cycle, the purchasing cycle, and the employee cycle, has a better internal control for it.